Hey guys, welcome to this month's stock market recap. I'm Robert Montes. I'm the owner of Nexus Wealth Management. And today we're going to be diving into what helped the market, what hurt the market, and how it affects your everyday life for the month of September 2025. Now overall, September was a solid month for the markets, wrapping up with very positive momentum. We saw the S&P finish up 3.3%, the Dow up 2.5%, and the Nasdaq finish up 5.3%, all of which showed that positive returns can keep happening even when we have some bumps along the road. Now as far as factors that helped the market last month, a couple of things really stood out. First of all, we saw the Federal Reserve lowering interest rates by about a quarter point. This makes it easier for families to afford home loans, car loans, all of these things which support the sense of financial stability because it costs less to borrow money. Second, we saw strong performances in sectors like technology and healthcare. This was fueled by AI innovations and solid earnings, and it lifted the market. Think of it as companies reinvesting into the future, which creates more job opportunities for American households. Third, we saw resilient economic data like steady consumer spending, which showed the economy's holding up well, giving confidence that everyday expenses like groceries and school supplies aren't going to spike out of control. Now, on the flip side, there were a couple of areas to keep watch on. First, we saw geopolitical tensions in the Middle East, which caused a brief oil price spike mid-month. This led to higher costs at the gas pump earlier in the month. However, averages as a whole were down by the end of month from $3.20 around the 18th down to about $2.67 on the Gulf Coast, not here in Montana, but I guess that's what it got out there. Second, we saw trade tariff uncertainties with China added some caution, potentially nudging up costs for household goods, though delays in implementation gave everyone a bit of breathing room, but it's still worth paying attention to. Finally, we saw softening labor data with fewer job additions than expected, which hinted at a cooling market, but the current data shows this is more of a slowdown to sustainable levels versus a catastrophic job loss scenario. As far as international events Americans should be noting, one was China's big stimulus push, which rallied the markets, could boost global trade opportunities. Two are the ongoing Middle East developments, which may impact energy costs in the upcoming months. Both of these are worth keeping an eye on. Guys, as far as someone who's also juggling work, family, kids, all that good stuff, here's what I think are your key takeaways. First, stay diversified across stocks, bonds, and maybe some international options. It's the proverbial don't put all your eggs in one basket, and it does make a very big difference long term. Second, continue to monitor inflation trends. Inflation has been a little bit higher. This past month, it finished up, I think, around 4%. And so that's definitely something worth paying attention to. But it's something that's not out of hand yet. Third, review your retirement accounts regularly. With rates changing, it makes sense to kind of review what's going on, what your allocation looks like. And whether you're a busy professional, you're a mom juggling career, family, and finances, or you simply want a fresh perspective of your wealth strategy for you or your company's 401k plan, guys, drop me a message. We'd love to chat about how Nexus can help you thrive. Let me know if I missed anything. Please consider leaving a like, a comment. If you feel crazy, go ahead and share the video. Thank you guys so much. Catch you on the next video. Until then, take care and God bless.